We're talking about the major investment themes of 2022 and the outlook for gold, silver, and miners with E.B. Tucker, director of Metalla Royalty and author of Why Gold, Why Now? E.B., welcome back to the show. Thank you for being a part of our Outlook 2022 series.
Thanks for having me, David.
Yeah, no problem. As we're speaking today, on Friday, the Dow's down 300 points. And tell us about the story of your stockbroker. He sent you something overnight.
This is I get a lot of gifts at Christmas time, but this is the most unique gift I got all year. One of my stockbrokers sent this to me. It's a dancing bear, and it's carved out of some sort of quartz or something. And the carver is pretty famous Inuit artist, so it's very interesting. But it came with a whole story about when the bear's dancing, it's a sign of confidence. That the bear's expressing this dominance. And I said, well, I mean, I love art. I said, well, what does it mean when your stockbroker sends you a dancing bear? It means that you've had a tough year. And so anyway, I know he's watching, so I'm not going to say who it is. But I have a couple of brokers, so you won't be able to pin me down on which one it is. But it's the most unique gift I got this year, and I hope next year he sends me a dancing bull. I mean, that's what I'm going for. Is it will be next year? I'll get a matching gift, that'll have big horns on it.
That's the theme of our discussion today. So people who have, I guess, invested in the minerals and the metal space have had a tough year. So that bear might have been justified. If you invested in other things, the tech sector, for example, you had a great year. What's he trying to say right now? Is he projecting a rotation? Is he giving you signs of a change of fortune? Is that what the message is?
Most likely he's just messing with me, and expects me to respond in kind. But look, here's the thing. I don't think people have made as much money as they'd like you to think. I mean, all these people now say that they're day traders, but I don't think they are. I think what's happened is that they took the stimulus money, they bought stocks that were popular, they got on Reddit and all these forums, and they started coming up with the next great thing. And now the market's rolling over. If you look at these popular stocks, they're down heavily. In fact, stocks that did really, really well with no fundamentals have rolled over hard. And what I see is these people freeze in place. So what it is you pick up nickels, and then when you lose dollars, you freeze and you pause and you say, well, it'll come back. And the reality is that it's not coming back. Things are shifting. You have this gigantic platform with all the governments of the world coming out and saying, we're going to be net zero carbon emissions. Everybody's going to have electric cars. We're going to redo our whole power grid and all this system. And nobody's doing the math on how much copper is needed. And meanwhile, the copper stocks are just, they're left on the road for dead. I mean, with Nova Royalty, NOVR, I mean, I've got upwards of a century of copper royalty exposure to the biggest development projects out there. And nobody wants that, right? So I think we're shifting. We're turning into a time next year where you're going to see money start flowing into things that are real and things that have substance. And by the way, David, when you own something real, you sleep great at night. You're not worried about the next thing the company is going to say. I mean, these people with GameStop and AMC and Pancake Coin and Sushi Token, I mean, it's crazy. It's like they're sitting and waiting, and these things are going down, and they're just freezing in place. But what do you really own? You own nothing. So what's worked out well for me is that this is the time of year. Tax loss selling is the time of year when I make bigger moves. I mean, you look around, if something's down, it's because people's brokers telling them to sell it. Maybe that's what my broker's saying. Clean up the losses, take them against gains. But I think you do the opposite of that. I mean, you look at a stock like Metalla, MTA, that's done 8 transactions this year in the royalty space. It's got over 70 royalties now, which is decades and decades of gold production. Gold price is doing fine. I mean, $1,800 for mining companies, they're making money. They're consolidating. Look at Kirkland getting bought. Look at these Pretium getting bought. I mean, look at these companies are consolidating. They're doing great. So you see the charts, and they're all being punished for tax loss selling. Turn around, do the opposite, see what January brings. I mean, that's how I think people need to think in the short run.
All right, we're going to talk about tax loss selling in just a bit. But let's talk about what you mentioned earlier, real and have substance. What are things that have substance now, EB? How do you define something that is real and something that is not? I believe this is a question for first-year philosophy students, by the way. But maybe we can discuss this here.
Yeah, I mean, the most important thing to realize is that the powers that be have you playing dizzy bat. I don't know if you ever played dizzy bat when you were a kid, but you put your head on a bat and you spin around 10, 20 times and you stand up and you try to walk and you can't walk because every single that's what Americans do. That's part of what's wrong with us. Okay, so this is what's happening. Inflation is going to be transitory. Oh, okay, wait a minute. Inflation's not going to be transitory. Oh, wait a minute. It is going to be transitory again. Okay, but don't worry. We have it under control. Interest rates are going to go up. They're going to go down. They're going to go sideways. Wait a minute. Real interest rates are negative. Well, what are real interest rates? I don't know. They said it doesn't matter. I mean, you see every single day, you've got a new series of narratives coming out that it's very, very confusing. And crypto, okay, now forget about like Bitcoin, Ethereum, the major coins, which have kind of different purposes. But you have 10,000 tiny crypto coins, which basically means you have a national sweepstakes where everybody's going in, and it's like with scratch-off tickets at the gas station. Everybody's going in and saying, well, which is the next coin that's going to go crazy? Is it Pizza Coin? I don't know. It might be Pizza Coin. It might be Token. What is it going to be? Well, I'm going to go after it. It's a penny. It might go to $1. You know, if it goes to $1, then I'll be really rich. But it doesn't go to $1. It goes to a tenth of a penny, and then you trade out of it. Dogcoin is on Saturday Night Live at 70 cents, and now it's 17 cents. But, well, maybe it'll come back, but it's probably not going to come back. You're distracted. You see, this is a huge distraction. And then taxes are going to go up, maybe only for the rich. Okay, well, maybe not for me, but I hope to be rich one day, but I don't want to pay any taxes when I'm rich. It's a huge distraction. And then you got virus stuff and booster shots and other variants and more booster shots and spike proteins and 75 different, times the way the variant can get you that the other one can't get you. And this is a time when your job is to not be confused. Okay. Like, look, take a minute, turn off the media, turn off the TV, don't turn this interview off, but turn off the other interviews and take a deep breath and say, what is going on here? Okay. What do I own? And then ask yourself, what do I want to own if I want to own it for a year or two? Like, what are the big trends that are happening? Okay. The metaverse is a big trend that's happening. Okay. But this is an emerging trend. Okay. The blockchain economy is an emerging trend. The blockchain economy doesn't have anything to do with Pizza Coin. All right. So if you have Pizza Coin and you think it's going to be part of the blockchain economy, I'm not going to tell you that you're wrong, but I'm going to say the odds are probably against you. Okay. So look at the energy transition. How much copper is needed for the energy transition? You're going to need to find a gigantic copper mine every year or two for the next 2 decades. Are you going to be able to do that? Probably not. So what's going to happen to the price of copper? Probably going to go higher. What do I want to own? Mining stocks? Maybe. Royalty stocks? Yes, that's what I want to own. And how am I going to sleep when I own those royalty stocks? Great, because I don't care what happens in the short run. I don't care about the day-to-day, what the Fed says. Is the Fed going to do this? Are they going to taper? Are they not going to taper? How much are they going to taper? Are they going to raise rates? They're not going to raise rates? Look, David, this is what people don't understand. Interest rates are deeply negative. Deeply negative. And they say, well, EB, they say, EB, you're wrong. The interest rate is 1% on the 10-year. Okay, yes, but the inflation rate is, I say 9%. The government says, 6 or 7. Okay, let's take the government's figure just to be fair. That means that 6 or 7% interest inflation rate, 1% interest rate, you're going backwards by 5%. Do you see this? So why would the government want you to go backwards? It's very simple, because if you can keep real interest rates negative, you are eroding the value of the debt. Do you see this? So like if interest rates are 1% and inflation is 6 or 7%, then every single year the pile of debt is 5% cheaper to pay off. And nobody understands this. They say, well, this is too confusing for me. I'm just going to stay on Reddit and buy more stocks that sound interesting. Okay, and I'm going to become rich one day. Right. But the reality is that you go to work and you save money and you're trying to have a better life. And then the money that you save is losing value by 5 or 6% a year. And that's the conservative estimate. The real inflation rate's probably 9 or 10. And so you have 9, 10% inflation, 1% interest rates. You're going backwards by 9% a year. And that's what people cannot understand. And they don't even want to think about it.
Okay.
They just say, well, I'll just speculate. You see how everyone's a speculator? Everyone is a speculator. I mean, I'm telling you, I've been going to Christmas parties, okay? And I go to the Christmas party. What have you been up to? I've been trading stocks. Everybody's trading stocks. What are you trading? Oh, this and that, all this stuff. And it's down right now, but it'll come back. And everybody is a speculator. And so next year, I expect this speculation runs out of gas. Okay. There's no more stimulus check coming, okay? There's no more liquidity coming into the average person's pocket. They got a raise this year, but everything they're buying is going up in price. Sales are slowing down. The refinance boom is slowing down. Everybody got their rocket mortgage, sucked the money out of their house, went on a trip, bought a bunch of toys and plastic and stuff they don't need. And now this is all slowing down. And so as this slows down and people see the stock market is grinding sideways, it's not doing anything. It's up 300, down 400, up 250, down 100. It's not doing anything. There's rotation going on. The big stocks are getting less appealing, and the small growth stocks are starting to become more appealing because people are finding fundamental growth and they're buying that. Whereas for 10 years, it's been buy the gigantic tech companies and call it a day. That's over. It's finished. Yeah. So next year, you're going to see a rotation out of that, and then you're going to see a move to something real. And people are going to say, what does it even mean, something that's real, something that's tangible, something that someone else's effort to produce this? I mean, imagine when you own a royalty, you have 20 or 30 years of production of an actual hard commodity that you drop on your foot and it hurts, okay? And somebody else pays to bring that out of the ground. Where do you think prices are going? Much higher. So the operating cost of these mines is going much higher.
So, all right, you brought up a number of themes. Let me just summarize for the audience here. So, emerging trends, blockchain technology, of course, the metaverse, energy transition you brought up. So, speculation coming to an end, that seems to be the major concern here for I guess, risk asset investors. But why would it come to an end, EB? Is it because interest rates are potentially rising? Is it because we'll see an end to zero interest rates, which we've seen for so long? That in itself could be a theme. The question is why? Why would people stop buying meme stocks?
Yeah. Let me tell you, I have this gorgeous Metallica mug that the company sent me, made by Yeti. It's got the stock symbol in the back here. Right. So let's talk about Metallica. Now, Metallica got very hot in the beginning of this year. Stock went to like $13.50 US. And then the money flowed out of the stock. I watch it every single day on the screen behind me here. Meanwhile, the business got fundamentally better. And so the reason I bring this up is because what we've seen in this market is speculative money flows like a giant tidal wave over to something like a movie theater chain. And then it starts to flow out. Boom, all the way over to the other, goes to something else. And who's left holding the bag? You are. So the person that's least informed is left holding the bag. So speculative trends, what happens is this money goes flying one direction or the other. I say, well, why'd you buy GameStop? Well, YOLO, you only live once. Oh, that's not a very good reason. Okay, so this is what's been happening in 2021. Now, eventually people take losses like they're doing now. They pull money out of the market to live. Their cost of living is going up. Their wife says, look, the tuition went up for the kid. The medical insurance costs went up. The car payment changed. We had to get a new car. We got an electric car, whatever. Things change. You don't have this surplus cash lying around. Go to the grocery store. Go to the organic grocery store. Costs are up. You're ringing up. You're 10, 12% more than you were last year. If you buy meat, you're 30% more. Okay, so that people pull this out. Well, this is the speculative wave. And so as this speculative wave moves around, okay, sure. This loses its power. Every time the wave crashes, it leaves a little water on the beach. Sure. Okay, and this wave is diminishing in power. And so as you move into next year, this is done. And you look at it and you say, what do I want to own? What do I actually, forget about what do I want to buy? That's everyone's question. EB, what do I buy? What do I buy? What do I buy? But nobody ever says, what should I own? If I want to own something. I mean, you don't buy a business and then trade it 2 days later. That's not what you do. You buy a business and you run it for 4 or 5 years, and the business gets
Right.
better, and you sell it.
Well, those are traders. So, okay, let's talk about speculation. So you said speculation is going to likely dry up. All right, that some would agree with you. Maybe speculation would dry up in the 10,000 altcoins that you mentioned many of which probably aren't going anywhere, don't have a future anyway. But let's talk about speculation in, let's say, the resource sector. People are speculating in cryptos, but if they're buying junior companies and you don't really necessarily know if a deposit's going to work out, isn't that a form of speculation as well, EB?
It is. It is. And that used to attract a lot of speculative money, because everybody knows the most exciting thing in life is you buy a junior mining stock and they find something and it goes shooting to the moon. But that's not happening anymore. So that hasn't happened in 10 years. In fact, most of the people in the market today say, what is a junior mining stock? Now, let me just be clear. I'm not advocating people speculate in junior mining stocks. In fact, based on my experience over 20 years, I decided I didn't want to own any junior mining stocks. I wanted to own royalties, and I don't even want to own a royalty on the junior mining stock. I mean, I'm interested in owning royalties on big development projects. I mean, take copper, for example. There is no small copper mine that I know of. I mean, maybe there's one here, one there, but this is a multi-billion-dollar project to put a copper mine in production. If I can have 1% of that, then it goes on for 50, 100 years, I'm all in on that. That's something I own. I don't do anything for 50 years. I mean, that's the best business in the world. In my book, that's what I call it. It's the most profitable business in the world. And so this type of thing, I think, is going to become in vogue, because people are going to say, what do I actually own? What is this? I mean, I own GameStop. I own a bunch of strip center video stores, and there's guys behind plexiglass, selling used video games. I'm not saying it's a bad business, but I'm saying I don't think it's a $20 billion business. I just don't. I mean, I think it's a real business, but it's not something that you feel great about owning, because the games are going to be distributed, via the web. And will those guys be able to dominate that? Maybe, but I don't know that it's that good of a bet. I mean, so I just think people, because of the confusion, they're playing dizzy bat every day. They can't see what's going on. All they can see is what's right in front of their face. And so they have no foresight. They can't see what's coming down the road. And I don't think junior mining stocks are the place to be. I mean, there's a lot of risk in there. Most of the projects don't work out. But I think when you have a royalty, you've got something that is very obviously set to gain traction, to gain value. I mean, you look at the gold price. Everybody says, well, why doesn't it go to 5,000? Doesn't need to. I mean, you put the gold price at 2,000, 2,200, the value of 30 years of gold production and royalties goes crazy. I mean, believe me, I've seen the models, so, right. And why isn't the gold price moving? I mean, this is a Bloomberg terminal. You go in the news section of this thing. You can't find one article about gold. Not one. And every single article is tokens, 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 tokens. And Elon Musk and all, it's constant. And so the idea that owning gold is a good idea is so foreign to people that what's going to happen is one day they're going to panic and they're going to say, my entire life is held on my phone. So I'm basically in a digital prison. Mm-hmm. All my pizza coin is on the phone and it just got hacked. All my data is on the phone. Everything I own is online. I've got no cash. I've got no gold. I've got some real estate, but the taxes keep going up and interest rates went up, so I can't sell it, and I'm stuck. Okay, so this is the type of thing where people wake up. Okay. And so you can, if you're watching this interview, you can wake up sooner. You can say, I'm going to be ahead of that. I'm not going to be behind that stampeding herd of people that's just charging in one direction or the other. I'm going to go ahead of that herd. So that's coming. I think it's coming this year.
Gold, silver, or stocks. Let's just stick with those three assets. Which will do the best in 2022?
Look, I mean, obviously, I'm partial to the royalty business. I mean, I think gold goes up over 2,000 this coming year, and I think the royalty business does better at a multiple of that. And right. Silver hit 50 in 1980. It hit 50 in 2011, and it's sitting at 22. It's a byproduct metal. It's not something you can turn on the spigot and whenever you want. So silver, I think, gets a little crazy at some point. And I think you got to be careful how you play that. If you play it with short-term trading instruments, you have a lot of pressure. So how do you play it? Well, Metallo's got about a third of the company's royalties are silver related. So I mean, that's how I've chosen to play it. My stockbroker can send me bears overnight post as much as he wants, and I feel great about the royalties that I own. So we go into this next year. I expect the overall markets to grind sideways, not really go anywhere, disappoint people. And I think that the metals are going to shine, because remember, there's people out there managing 10 billion, and they're sitting with negative real interest rates, churning markets, confusion every day, and they have investors to satisfy. And it doesn't take a whole lot for them to say, I need something stable. Yeah. And when that happens, it's too late. I mean, that's only going to happen one time. So you got to be ahead of that.
Tax loss selling. Let's talk about that, and we'll end it there. What does that mean?
Yeah. So look, this is one thing I want everybody to really understand, is that my whole career, I've done the opposite of what the brokers have told me to do. They always say at the end of the year, hey, EB, you got all these gains over here. You got a couple stocks that are dogs. Sell the dogs and take it against the gains. I don't do that. So I actually do the opposite. I investigate my dogs, and I say, well, what happened in this business? I mean, did the business get worse? Okay, maybe I will sell it. But if the business stayed about the same and the stock got a little volatile and everybody's selling it for taxes, I'll buy it and then wait and see in January the stock comes out of the water like a beach ball that you held under the water, comes flying out, and then I'll sell it then. So I've done this many, many times. It's really fun to watch. It goes on until about the 22nd or 23rd of December. Everybody goes on holiday and nobody's trading, and the market value, the volume goes way down. And then all of a sudden, these stocks that were getting punished during tax loss selling start moving up. Into January, they start moving up again. And so when your broker tells you to do tax loss selling, I'm not telling you to don't do what he says, but just think about it. I mean, if the stock's getting punished, sometimes you come into January and all that punishment's done. I mean, everybody is tax loss selling right now. So you have something that's down a lot, you think twice about selling it. Sell it in January. I've done this years and years and years. It's a lot of fun, and everybody looks in January and says, "Wow, why is that stock going up so much?" Well, nobody's selling it anymore. And so if you do the opposite, you're on the other side of that. It's very fun.
Interesting. Okay. Do you actually save in taxes for the strategy?
Well, the thing about it is that you're going to pay taxes regardless, right? And so you look at in the U.S., my capital gains rate is 23.8%. It's 20% in the high income bracket, and then there's another 3.8%. So it's quite high, and everybody thinks that's a big deal. But if the stock look at Metallo, for example, if you're tax loss selling Metallo to save 23.8%, but the stock's down 25% because of tax loss selling, are you really saving any money? No. I mean, you're better off letting the stock come out of the water and selling it later. I'm not going to be selling my own stock during tax loss selling. But what I'm saying is that take that stock as an example. Are you saving any money if you're trying to save the 23% tax and the stock's down 25% during tax loss selling? Are you really saving? No, you're not. If that stock returns back to where it was before tax loss selling.
But why would you pay capital gains if you're down?
Well, because you have gains, and then you have stocks that your broker looks in there and he says, hey, you got 20 stocks, three or four of them are down. Sell those stocks, take it against your gains, and neutralize the gains you have in your pizza coin or whatever else it is.
You're assuming you had gains in something else. Yeah, all right, cool.
Exactly. I mean, if you have all losses, then there's no point in tax loss selling. But typically this time of year, the broker says, hey, you did really well in this stock. Beginning of the year, we have this $50,000 gain. You got a couple stocks that are down. Why don't you just sell those, take the loss, put it against the gain, and then you'll lower your tax bill. But my point is, if the stock you're going to sell is already beat up because of tax loss selling, all you're doing is following the herd.
I understand.
So where I've had good luck is do the opposite. Buy the stock that people are tax loss selling. Then come January, nobody's selling it anymore. Pops back up, and then you carry the gain into next year. You can deal with it later. I mean, it's kind of a bad idea to be doing what everyone is doing at the same time. it's like anything in life, right? If everybody's thinking the same thing, somebody's not thinking. So this is the time of year where you can take advantage of that. That's what I've done for many years. It's worked out great.
Well, EB, that was a fantastic interview full of quotable quotes. I appreciate you coming on. Thank you for your outlook. Merry Christmas, happy holidays to you, and I'll see you in the new year.
Look forward to it, David. Thanks for having me.
Thank you for watching Kitco News. I'm David Lin.